You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
Frank Holmes is here with me, and I am thrilled to have you, Frank. I got to tell you, I remember that phone call in 2018 when you were launching Hive. And, knowing you for as long as I have, I had to immediately buy. I mean, I value your insights. I think that you've been very evidently ahead of the curve on a lot of levels. Would love to explore today the conversation around ESG, where the mining industry is headed, and we'll bounce it all around. But also, frankly, all pun intended, how you build a good corporate culture, because you're running two corporations. So thank you very much for being on the blockchain interview series.
Well, it's great to be with you, Dan the man. And it's when you're older, you develop systems of thinking and processing. And when it comes to culture, it's very different if you're in a growth phase versus a defensive phase, like stock market, how much cash do you have, et cetera. As a portfolio manager, the allocation of capital, and the same thing is with the mindset of people. I've seen where you have to, the idea that you have to move quickly, but let's work backwards on understanding what creates a culture. Your outcomes or your behaviors are based on someone's experiences, and a lot of that's explicit and tacit knowledge. They may have learned it at JP Morgan. They might have learned it at, I remember when I first started in the business, Mother Miro used to be the biggest trainer for a 6-week course in New York City for retail brokers. I mean, you lived in the hotel, but it was building a culture that was like Xerox had. So it's about systems and processes and what you value and how you value recognition and achievement. So money management, which you and I have grew up in, is very performance driven. You're buck naked every day in the newspaper. You can't hide. And you've got all these critics running around and telling you that you put on 5 pounds, like your portfolio is dragging because you put on 5 pounds. But it's can you handle that criticism because you're now public? Can you raise to that you're walking on that basketball court for the NBA playoffs, or you're going on the hockey ring and it's NHL playoffs? That mindset is very, very important to go along with your intellectual capacity. And I think it's very different from a defensive culture and an offensive culture. And the first time I recognized that was a company that was doing this research where there's 20 zip codes in America that are very similar. So they know that the people, they call it furs and station wagons. And so in every major city, there's a pocket area. And then there's another area where they always put, it's called shotguns and pickups, where the Army puts up their billboard ads. Now, they're not going to put up in my neighborhood, but there's other places they're going to do that because they're relating to the culture of that group. When you take, say, lawyers as such, so easy to think of, a lawyer's mindset, if they are a litigator, they are growing, punching, attacking. They're very different than a lawyer that's a defensive person that's trying to block all those punches being thrown out. The other person's trying to jab, jab, jab. And it's important to recognize that you're in a growth cycle, and this cycle is very, very has a different culture. So that's something that I noticed from fund manager is similar to here in Hive.
Yeah. So how do you go about encouraging that culture, right? Because I get that you're saying it's about disruption, it's about growth, but you've got to be in a position to encourage risk taking by your crew.
Yeah, and so like we just hit the exahash in August, so there's a 5% of your salary bonus.
That'll encourage you.
Define that. Define it because the company hit an exahash, and every time we hit an exahash, there'll be another cash bonus in addition to stock options on your reset every year that you've been working with us. So there's many different ways, but you're trying to relate it to performance. And I think that that's the key part, related to performance.
Yeah, so
Oh,
alignment. I like that. Have your employees, your crew, the people in the bunker with you aligned with the shareholders' interest. That's a wonderful thing for everybody.
and we did RSUs when we hired people, so make sure that they're pregnant with stock. We also gave stock options to make sure that they all have a position. And so far, very happy employees. And if we can hit a couple exahashes a year, that means their bonus are going to stay ahead of inflation.
Yeah. So let's talk a little bit about the industry, right? The mining industry, particularly. You're out there with some pretty big forecasts on where you see HIVE as a company growing to. What does that mean for the overall mining industry? How big can it get?
Well, I think actually we're probably understated, Dan, because we just came out with our financials and we are the cheapest on revenue to market cap. I mean, I look at some of the peers and they're all relying on one service provider. They're relying on, now they have to be careful of bad energy. So they have to pivot. The energy is not there, but they promised 10 exahash, 12 exahash. So I scratched my head and they diluted the heck of their company. Some of these companies diluted in the past year 1,000%, tenfold increase in number of shares outstanding. And the market gives them a bigger market cap because they went and bought equipment that's not delivered yet. And if it was all delivered, they couldn't actually plug it in. And so I think that HIVE is in the universe that I look at, it's the least amount of dilution to the shareholders. And it has the highest revenue gross and the highest revenue per share, and also cash flow. So our planning's been very, very actually modest and been pushed, but make bigger pronouncements, buy this, buy that. No, I'm going to just go as I feel comfortable with to make sure that I'm aligning energy capacity with equipment, because they can both get ahead of each other. You can get a lot of energy, but you don't have equipment. You can belong too much equipment and you don't have the energy to plug it in. So I've really been conscientious of dovetailing that. And that's a big reason why hiring our president and chief operating officer, Aiden Killick, because he's an electrical engineer. He's worked in the capital markets. He understands upswings, downswings, and he lived through the winter. So, and he knows about planning real estate and projects. So we'll take a lot of sort of that stressful stuff off of my desk because he has a core competence there.
Yeah. So coming back to the question though, how big do you think the actual industry can become? I mean, I think it's reasonable to say we're for Bitcoin someplace around 8 to 10 billion right now on a run rate basis. Ethereum's bigger than that. Are we looking at $100 billion, a $200 billion industry in years out?
Oh, I think so. I also think that it's also related to cheap capital. I've seen this rodeo in the gold mining industry. The gold royalty companies love it when there's no funding available, so therefore they get to pick their best deals. And as soon as the capital markets heat up and there's cheap money around, they can't carve out great deals. And so right now there's an abundance of cheap money, and hopefully some of these other players are out there are actually going to be able to deploy what they promised to be able to deploy. We said we would have an exahash by August. We delivered. If you convert it, it's interesting. HIVE was the first public company in the space. And the Riot then came and jumped on the bandwagon, but they were all about pumping up stock and they all got spanked, which is good. But most of the other guys jumped in this business were really stock promoters. It's a flavor of the month, and they're all gone. This has real great CEOs. The caliber of the CEOs is another level, which I can relate to so easily. And I know that when I have to go and speak at conferences, etc., I have to have my A game. I have to, like I'm walking on the court with true NBA type players. So the industry is evolving nicely. How different people will pivot. Once we get a real bear drought, there's no source of capital, cheap capital for people to buy all this equipment they're doing, then I think you'll see mergers and acquisitions take place. But right now, it's can I get more capital on my balance sheet? And the market has rewarded not revenue and cash flow like we've delivered, more so it's on all this expected future revenue and cash flow. But I'm thrilled for the shareholders because I looked at our balance sheet today, and then based on Bitcoin today and Ethereum, a year ago, when I took over this headache, it had $2 million, and now it has 140 million. We've done an ATM at the market mechanism for raising capital, but we've basically been able to hodl all of our coin production and spend $80 million on new equipment. And the balance sheet now is worth almost $150 million then. And we delivered at the end of March, the highest revenue and the highest earnings. And then we did it again in June. We'll see how it pans out for this quarter, September. If you convert, this is where people have missed. If you convert the Ethereum into the Bitcoin equivalent, you know what we're mining today? 13.5 Bitcoin a day. So that's why we're the most profitable. But everyone has caught onto this FUD story that Ethereum is going to stop mining and proof of stake is going to take over. Every one of these upgrades have just shrunk the amount of Ethereum in the capital markets. So it's actually how bold the rise in the Ethereum prices. I did an interview earlier today with Kitco, and I explained to the interviewer, and his name is David Lynn, and it's silver to gold. Ethereum is like silver to gold. Gold has a run of 10%, silver runs 15 to 20. Gold corrects 10%, silver falls 15 to 20%. Ethereum is very similar. Ethereum has this explosive capacity. So over the past 12 months, Ethereum has outperformed Bitcoin. Over the past 3 weeks, Bitcoin's outperformed Ethereum. But if we get a sustainable run here, Ethereum just ramps it up. And that's what we've been hodling. And it shows up on our balance sheet on mark to market. So I'm very happy with that. If I have to go to proof of stake, I can earn income from it. But I believe that the best is not to have my competition mining Ethereum. But now I see HUD she's been very smart, and she started mining Ethereum because as she converts it, it was cheaper than buying Bitmain machines. And they're now advertising it's only costing $3,000 to mine a Bitcoin. Well, that's the same for us. It's about $3,000 if we converted it all. But we believe Ethereum is a unique, special animal. And just like JP Morgan and Goldman Sachs recent report came out, and then it was resent by Zero Hedge, is that it has much more an Internet of Things. It's going to be much more the Internet of blockchain.
So it brings up a lot of great points here. So as a miner, what does your gold background bring to the table? One, two, how do you manage between deciding to buy more equipment for Bitcoin or for Ethereum? And then three, you've got to raise capital at different times, right? So you can have to make the choice between selling Bitcoin, Ethereum, stock, or debt, by the way, because that is also an option for you. Sorry to throw it all at you.
We're the first public company. We're still the green only company, and first to have an ESG strategy. And I'm a fund manager, so a lot of experience on the creation of gold mining companies. I was on the ground floor of and fund in the mutual fund world, now the ETF world. I think it's helped me survive, and I think I'm the only day one chairman still around that launched this business. And so I think that my experience has probably played a big role in being able to fight off silly proxy battles and get rid of bad actors and focus on what unnecessary growth and how you traded our Ethereum early in this game before we really started to be able to mine to survive. I was very reluctant to do any financings that sub $1, sub $2. We really didn't start our ATM to HIVE was over $5. So it was a huge lift before we started tapping capital markets where we could get the highest returns on capital model. I think there's no doubt age is very important in dealing with these ups and downs and realizing every dollar is a prisoner. sequencing, project management, agility software, they like to call it now, making sure that people are versed in and are we overreaching in our equipment buying, or are we overreaching in our build out of electrical units? So I think from that end, touch wood, we've done a good job. We've had some mishaps with deliveries from Asia, always a pain because of COVID. But you know, during COVID, we did 2 major acquisitions. We bought in Quebec. We got something like 10,000 S9s free. We've been selling those off at 200 and change to buy new equipment. And we did the mega project because I want to own our own equipment. Because what I found, Dan, was that every time Bitcoin goes up, the landlords come back and they try to ask you for more money, try to gouge you. You know, the state regulator doesn't like you, so you have to pay us more. This doesn't like you. And so we wanted to have better control of our destiny. And we were the first to go buy our own facilities. And I'm delighted what's happening there because we're building a campus at 30 megawatts a day. By December, it'll be 50 megawatts. By March, it'll be 70 megawatts. And in discussions, it looks like it could be 100 megawatts. So, and we own the land. Do you know what that's worth? That we first did this deal for $300,000 a megawatt. Riot paid $2 million. And then now we take a look for the build out. We're still much less expensive. So I'm really thrilled that I'm building a big asset on the balance sheet. And I'm upgrading with these NVIDIA chips, which allow me now we're testing, and we'll announce soon our the cloud partner we have to provide some of our GPU chips, especially the A40s, like driving a Bugatti, that you, for making $10 a day mining Ethereum, you make $10 an hour hosting that. That's what Amazon gets to charge. So we're going to have a different model that people can use that. And we're thrilled as we sort of build up, because I think that data centers are going to become much more insignificant asset class, especially tier 1, tier 2. Tier 3 and 4 is a big, big buck. You know, you're going to spend like $10 million a megawatt and all this backup. You don't have to tier 1 and tier 2. You just have to have other stuff of robustness to it. And it's going to grow as the cloud business grows and needs grow from everything in the world we're touching now.
So Frank, you threw out a lot of stuff there, and you've been always great about educating folks. Tier 1, tier 2, tier 3, tier 4. Explain what you mean by that. And also, you've always been a self-miner. You, as far as I know, you have not built a hosting site for others.
Yeah, but I'm not. And I'm not. So
talk to me about why.
So what happens is that you don't get the upside. You don't get the downside, but you don't get the upside. And every time you have a severe winter, especially all the foreigners, they all leave. You know, China is famous for leaving and dumping big losses, electrical bills in Sweden and Norway and America. So that's not our business model to take that risk. But what's happening is, one of my favorite stocks is a REIT, so Digital Realty. And it's a wonderful company if you really want to understand the digital data center growth. When you have data centers, and Dave Perel is building in Texas with natural gas, and it basically calls a zero tier. And basically, it's like a housing project. You bought the land, you put in the sewage, you put in the lighting, and you have to build the house. It's all your money, but you have to buy the plot of land. I bought this acre of land for $5,000, and after I put sewage and lighting in, it's now worth $50,000 an acre, and that's where I make my lift. That's basically his business model. The other level is if you want to go use these service providers, such as the most expensive of the world is Amazon, where they spend $1 billion on these mega centers, but they're spending, say simple numbers. If you want one tier, you're going to spend $1 million. All the infrastructure around it, air coolants, and then as you get to tier 2, you have what's called redundancy. You have backup batteries, backup generators, backup. And then that's going to cost you $2 to $3 million per megawatt. And then you go to tier 3, and it's going to cost you $5 or $6 million. Now you go to tier 4, which is the ultimate, which Facebook builds for managing their own facilities, etc. they're spending $8 to $10 million per megawatt. So what we're doing is basically buying things inexpensively and developing them at a tier 1 level and be able to provide what someone try to charge you for a tier 4, we're going to be able to provide you and not have to spend much more than a tier 2, I think is the number. So we're excited about this opportunity because if some of these GPU chips, if the world happened to all go to proof of stake, well, we just all of a sudden online can sell this service to you that you can do all your data research. So there's a lot of guys, Dan, and you're a quant guy, that are using these GPU chips during the day to do real technical analysis of fund flows and price action, much more robust than Bloomberg provides. And then when the market's over, they stop doing that type of trading and research, then those machines start mining Ethereum. There's one company I met, and they have 10 locations across America. So during the day, that's what they sell to. And then at nighttime, they're mining Ethereum. And what also is happening is where they go and they need for rendering for making movies. So they can turn around and sell that research. FactSet, which we use, if you want to use FactSet, you know what it takes. If you want to use one factor, such as low PE ratio for all stocks in the S&P 500, 10 years of data, every day of trading, buy me the best 50 stocks every quarter. That has to go back every day, takes 8 hours. So it has to go out to something that's rich that they outsource to this type of rendering in a batch, and then comes back the next day. This is only going to grow. AI needs, smart city, cars, all this stuff. So I feel very excited that we're going to own big data centers, build campuses, and so that's where I think is going to be the long-term future. But Bitcoin mining itself, now that's a complete different theory. That to me is very much like the gold bugs. When you talk to the ardent gold bug, it's like talking to a Bitcoin bug. It's all about the ultimate, my private property, and it's portable and no one can touch it. And the government wants to confiscate all my private assets, and they live with these boogeymans all the time. They're very, very, very similar. The difference is that I've seen is that a lot of these gold bugs are more or less making a political statement because they don't own any gold. These guys have written to me and complained to me about my gold funds, and I find out I've gone to conferences, etc. They don't buy it. It's their emotional conspiracy thinking. The Bitcoin guys are very similar, a lot of them, but they made a lot of money being early on Bitcoin.
Yep.
And that's the big difference. So a lot of gold people are defensive players. They're like your defense insurance lawyers. The Bitcoin players, they're your litigators. They're out for the big, $50 million car accident lawsuit, and we got 20% of that 50 million. That's 10 million in my pocket, and I crushed them in court. That's what you deal with.
Frank, don't hold back, man. Just don't hold back. Let's go full on here.
And then you get the very cerebral people that I think have done a phenomenal job in stewardship and leadership. Has been Michael Saylor. He's done a great job for the crypto mining business, that industry, and he's also done a great job of why companies should own Bitcoin, and they should hodl. If you can't grow your top line as fast as governments are printing money, then you can turn around and own Bitcoin. And because of the limited at 21 million coins and an ecosystem of 13,000 nodes and verifiers all around the world, and the decentralized mechanism, that it will grow. And the other layer of that is fractals. The fact that you can go to PayPal or you can go to Robinhood and you can buy a fractal of Bitcoin and Ethereum. That becomes a big game changer when you apply the network law or Metcalfe's law.
Wow. Okay. So let's talk a little bit about ESG. I think you were a big leader on ESG, going green. Can we talk about the social side of ESG and how you've led in that regard? Because I definitely see it.
Well, I'm very fortunate. I'm a fund manager, and you and I saw this, getting teeth on it about 6, 7 years ago. And mining companies have always been very sensitive, but it was never coined ESG as it came out of the socialist Europe. Really, it's where it comes from, that whole thesis. And Norway pushes it. So BlackRock is the biggest sovereign fund. They have to all of a sudden grow it. You can see it all of a sudden it grows as swell. But mining companies have always been doing it. So I've been aware of the significance of, and I myself have been given charitable work all through Latin America for decades now, and understanding giving back to the communities where you make money. But what we did, I think, is most interesting was not only being green only and recognizing that is a common, powerful factor long term. It was, what can we do for the community? And in Bowden, we've done a couple of things. The biggest sport that keeps kids off the streets or at malls is hockey. So we sponsor hockey, and we sponsor the players. There's a semi-pro league, and they all play in all the small communities all through Sweden. And the best get to go to the NHL, and they can't wait to play for the Rangers. So that it's this sort of mindset that's very strong. So we have a high profile with the community as sponsoring, and we give free tickets to kids. And now we're doing education with them. And now we're going to go sponsor the hockey arena. They need more capital to get better players, to be more competitive. And that's where their DNA of competition comes from. So we're there as being a good corporate citizen for hockey. And then it's also the education element. And so we're thrilled about that. Now we're in last week I was in New Brunswick and met with the mayor in St. Andre and what we're doing. And so the idea of getting the school system that we're going to start training kids how to run data centers. So that therefore we can be paying now. It gives kids a sense of being the average kid, the average person in that community makes $3,000 a month. The cost of living is very inexpensive. But still, that's not much money on a per hour basis. So we could turn around, and we're looking at putting a semi-training school on the end of our building because we have so much heat we're throwing off. And what can we do? So we've been buying more land around us so that we can grow with it and give us more path to the highways. So it's very exciting that you have to think about what you're giving back to the community. What there is a shortage of are data center technicians and managers. So we hope to be able to train them in Bowden, as well as train them in Quebec and in New Brunswick. And that's what part of our ESG strategy.
So do you think it's a mistake for the industry to embrace the whole verbiage of it being a mining industry? Should we be called processors or even data centers as you're speaking to, or farms? That's another way people describe these big facilities.
I think it comes back from the original smart contract. I think was created by Sasbo in '97. And what did he call it? Bit gold.
Bit gold.
It was the first smart contract. And many believe he's Satoshi. Here's a guy's a coder, a lawyer, a philosopher. When I saw his first presentation, Dan, I thought I was dealing with an ardent historical gold bug. It was like so similar until you have a hypothesis, you have all your testing to prove it out, and the conclusion is buy gold. No, it's now buy Bitcoin. That's the only difference I saw. All of this rational, logical process. I loved it. He's much more in depth on the historical destruction of paper money. And the more socialist a country is, the faster they're going to destroy the paper money. The faster, the more they actually can't stand decentralized Bitcoin. As you can see, China, it definitely doesn't like it. And you can see Europe is sort of lives convoluted of how they look at it. The most advanced would probably be Norway. Not Norway, not at all. They whipsawed us on their policies, but sorry, Switzerland. Switzerland is a very open mind about how they're adopting to it. So Zug itself has become an important center. But I remain pretty positive and constructive. I think the best thing for Bitcoin mining, what's happening, is that China's being pushed to the business. It's all coming to America. Texas is a big beneficiary. America's a big beneficiary. So rather than using processes to separate the gold, it's a process to separate electrons to create this digital money. And the easiest way to think of that to relate to gold was to call it mining. That's where I think the idea came from. And the coin, to make it something tangible, was to look like gold. And you've heard my story on diamonds, of how similar, if you try to, from my age, my vintage, when I try to explain to them that diamonds were that less than 5% of the women after World War II were getting engaged with a diamond ring. It wasn't thought of. And De Beers re-educated everyone on the importance that this intangible called love was validated by something tangible called a diamond. So Bitcoin becomes validated because it looks like a coin of gold. That was the psychological leap here. But what's most fascinating is that diamonds all of a sudden went from $100 an ounce, a carat, to $1,000 to 10,000. And then they did it again in Japan in 65. Less than 5% of the population are engaged. Now it's 80%, 80%. And now China's on the same torquing up, copying that, taking something that's intangible. Well, a Bitcoin is intangible. It's an intangible algorithm for the majority of people. And very few people can remember 5 things, remember 64 digits. So I think they have to try to make it look tangible. And that's the idea. If you make it look like gold, which has been around for 5,000 years, and you can't destroy that element of gold, so it has this intrinsic emotional value. I think that was sort of the psychology of it.
Interesting. So we're coming to like the wrap up period, and each time I ask the question, what do you think investors are missing? What in hindsight, what are they going to be looking backwards and saying, this was so obvious?
It's the gamers. All these kids have been being rewarded. All their children not recognize their children have been playing games. And if they're very good at it, they get rewarded in digital money of that particular software. That software rewards the best players. And they can take that and upgrade, and never have to take a check from mommy or daddy to buy new software if they're very good at it. There's a huge audience of new millennials out there that are gamers, and it's nothing for them. And they're going to inherit $10 trillion. The baby boomers over the next 25 years, we're going to pass over to these kids, and they're all used to digital money. And that's the big demographic shift they should try to grasp. That's something I think is an important element. The other part of that is more cerebral. Private property rights. When I talk to educated young portfolio managers, CFAs, et cetera, they still, unless they're lawyers, they really don't grasp private property and the importance of, like, IP. It comes out of common law. The only countries never to go bankrupt are common law countries. Civil law countries go bankrupt all the time. And in common law, you're innocent till proven guilty. Civil law, you're guilty till proven innocent. This is my private property. This is my song. This is my story. I'm protected. The rule of law protects me from that. And so now in 82, they got rid of bearer bonds. And so all that was left was really cash in your wallet. Or if you had stamp collectors, stamps where you could buy and sell stamps, and you could buy and sell gold, 24 karat gold. But the idea of outside of it, so they get rid of cash, what's going to be left? That's going to be in bearer form. It's going to be Bitcoin. It's going to be Ethereum. And I think that's what people are going to miss. But that's where the big battle with governments are, because they want to have their tentacles around all private property.
So I also, as the second question, ask, and I'm going to twist this a little bit on you. The answer cannot be real estate, and it can't be financials. What industry do you see being most impacted? And it can't be esports, by the way. which industry is going to be most impacted by blockchain?
It's a great question. Right now, I've been focused on NFTs. I made an early investment in DeFi, decentralized financing, which is really using Ethereum. So it supports what I mine. And I think this idea of digitizing everything with a smart contract, it's exploded with sports memorabilia and now movies and music. So I think that will no doubt have a huge influence around the world.
Thank you, Frank. And thank you for continuing to block and tackle for your shareholders. We appreciate it. Be good health. Have great health. Thank you very much.
And remember, if you're not long, you'll be wrong.
Okay. Enjoy your day, Frank. Appreciate it.
Take care. Bye.
Bye.